Good morning. I'm Andy Myers at Weiss Research.
I'm Jen Amos, and this is your morning market alert for Friday, December 17th. Stocks on Wall Street are likely to open in negative territory as the focus shifts back to Europe's debt problems. Moody's Investors Service cut Ireland's credit rating by 5 notches after warning earlier this week that it was considering downgrades of Greece and Spain as well. The move comes after EU leaders failed to agree on any measures to ease the sovereign debt crisis now. But they did vote to create a new resolution mechanism that kicks in after 2013, when the current $1 trillion bailout fund runs out. Stocks across Europe are broadly lower today, and the major Asian markets finished mixed.
Also dragging down the European markets is a big drop in shares of AstraZeneca. It's falling more than 5% in London after the U.S. Food and Drug Administration asked for more analysis before approving the company's new heart drug. Analysts at Jefferies say the extra trials will probably delay final approval by at least 6 months, a big worry because the patents on several AstraZeneca drugs are set to expire in the coming years. Analysts are out with calls on several other healthcare companies today. Leerink Swan boosted its rating on Amgen to outperform, and medical device maker Medtronic got an upgrade from Bernstein. But Tenet Healthcare was cut to hold by Deutsche Bank as it continues to weigh a takeover bid from Community Health Systems.
A couple technology companies may be on the move this morning. Shares of Oracle are jumping more than 4% in the pre-market after it posted sharp profit and revenue gains after Thursday's closing bell. Both figures topped Wall Street expectations as businesses increased their purchases of the company's software in the latest quarter. Following the results, Oppenheimer boosted its rating on Oracle to outperform, and both FBR Capital and ISI Group raised their price targets on the stock. Research In Motion is also set to open higher. The maker of the BlackBerry smartphone topped earnings estimates with its fiscal third quarter numbers and raised its forecast for the current quarter. ISI Group upped its price target on that stock as well after the release. But Citigroup is more bearish on Research In Motion's prospects. It recommends selling the stock and buying Apple and Vodafone instead. Apple also got a vote of confidence from Gabelli & Company this morning. It rated Apple a new buy with a price target of $450 a share.
The financial sector may be back in focus today on some M&A activity and analyst calls. Shares of Marshall & Ilsley are surging more than 25% after it agreed to a $4.1 billion buyout offer from Bank of Montreal. BMO shares are moving slightly lower in the pre-market. Meanwhile, Baird cut its rating on Comerica to neutral, and Macquarie downgraded several financial firms, including BB&T, Texas Capital Bank shares, and West America Bancorp. NASDAQ OMX Group also had its stock rating cut by FBR Capital, and Keefe Bruyette downgraded CME Group, which operates the Chicago Mercantile Exchange.
Some other potential stock movers to tell you about this morning. Accenture is jumping 4% in the pre-market after it reported big increases in profit and revenues in the latest quarter. And MasterCard is also set to open solidly higher. The company said the Federal Reserve's proposal to regulate debit cards will result in shifting merchant costs to consumers. And keep an eye on Coca-Cola Enterprises today. The bottling firm held its 2010 earnings forecast steady, but announced that it's buying back $200 million of its own stock by the end of the year.
Two more stocks to watch this morning. Southwest Airlines was upgraded to buy by Soleil Securities, and CBS also got a buy rating from Bank of America. CBS shares are rising 2% in the pre-market. That's the latest from Weiss Research. We'll be back after the opening bell with all the market reaction.